banking and mergers and acquisitions, having worked at Goldman Sachs' investment banking research, Bank of America Securities' mergers and acquisitions group, and several other smaller boutique investment banks, again all focused on mergers and acquisitions. Personally, I have executed a fair amount of LBO transactions ranging from as small as $10 million to over $6 billion. I am a CFA charter holder as well as a CFA instructor. The goals of this course is to provide a basic overview and introduction to leveraged buyouts, including a discussion and rationale of going private, the ideal LBO candidate, as well as drivers of value. We will also discuss the following items, including a description, importance, and implications of various items such as valuation, debt capacity, scenario analysis, sources and uses of funds, role of equity, and capital structure. We will also spend a little bit of time focusing on purchase accounting versus recap accounting, goodwill treatment, and other issues. You will be able to gain a fundamental knowledge required to understand leveraged transactions after you are done with this basic overview. To hone the concepts learned on this module, please be sure to follow up this course with our quick and dirty basic leveraged buyout modeling and, of course, our complex leveraged buyout modeling course. This does currently assume that you have a basic understanding of accounting, fundamental concepts in finance and valuation, and we highly recommend prerequisites to this course include our accounting and financial statements integration, our finance 101, and our corporate valuation courses at a bare minimum. Let's now turn our attention to the very first slide. What is a leveraged buyout? A leveraged buyout can be thought of through the following analogy. Leveraged buyout is simply using debt to buy something out, hence the word leverage and buyout. Now, you can akin this to the following analogy. Let's say you're buying a real estate property. Let's say you're buying a real estate property and the current owners of this property, let's say, currently have an 80% equity stake and they have yet to pay off the remaining 20% of the mortgage. You come in here and you borrow a massive amount of debt and you put down, let's say, anywhere between 10 to 20% to purchase this property, and you put down and you borrow anywhere between 80 to 90%. This is the leveraged buyout portion. Then you will use the internally generated cash flows. Key is the internally generated cash flows to pay down the debt and build equity. Build equity such that by the time you're done, your equity stake, not that this is drawn to scale, but pretend that there is no appreciation in the actual asset, but you will be able to build your equity up to the point using the internal cash flows generated to pay down the debt. And this allows you to now own a greater percentage of the company upon an exit or upon a sale. This is considered typically a financial transaction and usually sets the floor or the minimum valuation. Why is that? Because if a strategic buyer comes in theory, this is in theory now, they can also do the same thing and extract additional value if they're able to actually also provide economies of scale or cost savings or whatnot. Typically now, who is the private equity firm that is coming in? This is the person who is actually supplying the core capital, the equity base. Now, what is private equity? Think about private equities opposite the public equity market. What's the public equity market? That's simply the capital markets, the stock exchange, etc. So therefore, the private equity markets are basically sources of capital, sources of equity that are from private sources as opposed to the public, general John Doe investor, etc. Now, let's flip to the next slide. Leveraged buyouts basically provide a current market view of the range of hypothetical purchase prices by a third-party financial buyer. This is typically contingent upon several items. You must have an acceptable capital structure. You must have the right interest rate and return requirements for both the equity and the debt. We'll talk more about this a little bit. And also refinancing terms and whatnot. Typically speaking, and of course these targets will continuously change, especially as you meet different market trends in the current LBO cycle. But typically speaking, private equity firms like to generate at least a return of 25 to 30%. Here's a list of reasons why you might want to go private. Typically, LBO requires the buy-in of the management team. Hence, by the way, LBOs are sometimes considered MBOs for management buyouts because you absolutely need the management team to go there and run the company or bring in your own management team because you do not want to be running a portfolio company because you have, let's say, several several of these portfolio companies, you're not going to be able to allocate the time that's required to run the day-to-day operations. Hence, the reason why the management team is absolutely critical. Let's go into several reasons why LBOs are done. First of all, the public markets are not properly rewarding a company's true or intrinsic value. In this case, for instance, during the dot-com internet bubble, the quality, quote-unquote, old economy stocks were ignored and punished unnecessarily. In that case there, you might see that a lot of these firms realizing there's a lot of internally generated cash flows, the valuations are depressed. We'll talk about the ideal LBO candidate in a second, and therefore the private equities might want to come in. Lack of a strategic fit with the parent company. A company may want to divest their non-core assets. Well, there's a perfect opportunity to do a leveraged buyout there and take it in-house within the management team. Similarly, there might be a lack of attention from the headquarters of the parent company, and therefore there's a little bit of disgruntledness, and that subsidiary might decide to say, listen, I want to get myself out and I can grow if I have the right resources. Hence, the parent company might decide to say, nope, don't want that, or it's not priority right now. Regulatory issues, antitrust dynamics. Many times you have consolidated entities in an M&A who might be forced to divest a part of the business so that they will not get too big, all due to antitrust dynamics. For smaller middle market companies perhaps, or privately held companies, a significant shareholder or owner might decide to retire, and this way this will pave the way for existing management team to potentially own the business through a leveraged buyout. And let's now take a look at the ideal LBO candidate. First of all, as we mentioned already, you must have an experienced management team. A strong CEO and CFO are absolutely critical. Why? Because the CEO is supposedly supposed to provide the strategy and the strategic direction, whereas the CFO is the numbers person. And therefore, they are the ones who are probably among the most critical, as well as, of course, making sure that the company is intact. So COO, sales, etc., marketing, all obviously very critical as well. Financial profile, this is pretty important. The company must have an ability to generate a steady stream of cash flows. If the cash flows are not there, nobody's going to buy the company. Why not? The private equity firms need to make sure that there's steady cash flow to pay off the debt so that their equity stake does not go to nil. The banks, the ones providing the leverage and the debt, they want to make sure that they can get repaid, so there must, once again, be a steady stream of cash flows. This is probably one of the most important attributes of an ideal LBO candidate. Why? Because these cash flows must fund the operations and continue to pay down the debt. In conjunction with that, there must be low debt balances, or there ideally would be a low debt balance. Why? Because therefore additional leverage can be employed on this LBO. If you're already fully tapped out, and you can't do much additional with your capital structure, that's going to be a potential problem here, because if you already can't borrow additional funds to fund this leveraged buyout by definition, you might have a little bit of a problem there. High cash balances are ideal as well. Why is high cash balance? Because that, first of all, offsets the debt, but also you can use the cash clearly to actually pay for the actual leveraged buyout acquisition. In combination with all of these, you must also have a relatively cheap valuation. Why must you have a relatively cheap valuation? This way, if the public markets are undervaluing this particular entity and this firm, you can now go in there and you don't have to pay as much than if it were already fairly or overvalued. And therefore, from the perspective of the financial profile, it is very important to make sure you have all four of these components as much as you can. Also, there must be sufficient assets for collateral. Why? Because if it can be backed by assets, what you can do is the banks are going to be able to come in and be more comfortable loaning you the money. Because at the end of the day, banks being slightly more conservative than, let's say, the private equity folks, not necessarily the case, but generally speaking, they want their assets back as soon as possible. And if the company is not able to generate the cash flows, they want to know that their collateral is going to be worth something. And of course, you have industry factors that also influence operating risk. Do you have a competitive advantage over your competitors? Do you have a stable growth of demand? Is there high barriers to entry? What are the trends in regulation and impact on operations? All of these are key items to determine whether or not you have a good company here that's a good potential LBO candidate. Now, let's look at the true drivers of value. From where is the money actually coming from in a leveraged buyout? First of all, we already know that this is basically a massive stock buyback. You're basically increasing the amount of risk that you have, because why? You're employing a massive amount of debt, to buy back the equity, effectively wiping out the entire current equity base, and putting a significantly smaller percentage of equity on a relative basis. At this point here, you can also pause this video and refer to our exhibit on share repurchases, in which we describe in a regular share buyback, in a regular stock buyback program, you should have an increase in the stock price. Why you shouldn't have an increase if the financial markets and the capital markets are efficient, and again, in what circumstances are they going to be efficient. So please refer to that exhibit. Now might be not a bad time to do that. But generally speaking, at a massive stock buyback, you might see an increase in stock price for 3 qualitative factors. First of all, you basically reduce your shares outstanding. That increases earnings per share. Assuming constant PE ratio, stock price should go up. Behavioral effect. The management thinks the stock is undervalued, therefore they will buy low, sell high. And of course, basic economics, reduce supply, increase demand. However, if that's the case, again, we also prove in our share repurchase exhibit that there should be no additional value extracted. However, how is that going to be different from a leveraged buyout? First of all, you lower the cost of capital because you swap your equity for your debt. Now, this is potentially counterintuitive. Why? Because the required return on the private equity's capital is high. We said 25 to 30%. Whereas what you're doing is also leveraging the cheap source of capital to minimize your down payment. This is key, folks. What this means is your debt is going to be a smaller percentage in terms of the cost of the debt, the cost of capital. However, ultimately what you're doing here is, and this is the key, you are using other sources of capital to minimize. You're using other sources of capital to minimize the amount that you have to pay for this company. So if I said to you, I give you the opportunity to buy a huge mega billion-dollar company, but you pay $1, and in 5 to 10 years, the internally generated cash flows pays off the debt, and now the whole company is yours. Who's going to say no to that? No one's going to say no to that. Therefore, from that angle, what you look at it is to say the reason why the leverage buyout works is because you are buying an entire entity and not paying that much of your own capital, and you're going to use the cash flows generated to pay down the debt over time, such as your equity increases. This is different from a traditional, smaller share repurchase. Why is this different? This is different because in a traditional, smaller share repurchase, the equity base is still outstanding. You're not wiping away the entire capital structure. And again, we talk a lot more about that in our share repurchase exhibit. Again, using internal cash flows that are generated to pay off your debt to build equity. That is critical here. And of course, on a side tangent, this removes the company from public scrutiny, and therefore you don't have to worry about short-term results. As we all know, sometimes there's too much of emphasis on quarterly figures. And therefore, you can kind of operate your own company at your own pace without additional oversight that's necessary. Now, moving ahead, let's take a look at the different components if we were to build an LBO model. And of course, you will follow this up with our quick and dirty basic leverage buyout modeling as well as our complex modeling. Here is our LBO summary exhibit. In this LBO summary exhibit, let's go over the main components. We will look at each one of these boxes independently and in greater detail. First of all, you start with the illustrative transaction assumptions. You just kind of say, what kind of accounting are you using? We'll talk more about purchase versus recap accounting. What's the date of acquisition? What's LIBOR, etc. Then you look at the critical valuation summary. In the valuation summary, you have to figure out what am I currently being valued at and what am I going to buy the company at. In this case, we're assuming a 20% premium. Additional debt capacity is very important. Additional debt capacity basically says what is the maximum amount of money you can borrow additionally to fund this leverage buyout. Then you have your sources and uses of funds. Your sources and uses of funds are absolutely critical. If you had to ask me which one of these boxes or which component of a leverage buyout would I want to analyze if I could only choose one, clearly without a doubt it would be the sources and uses of funds. Why is the sources and uses of funds so important? It's very simple. Where are you getting your money from and what are you using to pay? Where are you getting your money from and what are you going to use that money to pay off? I need to know that because I need to figure out this goes into deal structure, this goes into valuation, this goes into a whole host of issues, and everything in your leverage buyout model ultimately is dictated by your sources and uses of funds. Then we have our equity sources, where we'll talk a little bit later on about rollover equity, as well as goodwill calculation, as well as summary returns and credit ratios once you are done building the rest of your model. You would always want to build a sensitivity analysis. So here's the switches page that basically says, well, let me take this and let me start sensitizing and controlling how I want this model to work. In our complex leverage buyout modeling, what's pretty cool about that module is one of the most complex leverage buyout models out there. We give you the ability to toggle between status quo and a full-blown LBO. In our enhancements, a leveraged buyout enhancements course, we also build in stuff like picks, recaps, less than 100% purchases, etc., and we'll build all of that into our model as well.
Now, family, if you are following what's being put down, this is Part 8, dealing with the DTC, DTCC, or we'll say it the right way, dealing with funding that's being provided through the DTC and DTCC, Part 8. Compliance officer training, loan officer training. Look, if you got stuff that needs to be liquidated, levied, monetized, all that and then some. So much to do, so little time. But I got a treat for you. I talk a lot about ARIS. I talk a lot about banking in the box. And a lot of folks that are still trying to grasp their mind around the level of technology that's involved. I decided to do this class a little bit different because I'm going to literally let the AI teach the class. So here's what's going to happen. I'm going to allow you inside the chat to post your questions. I'm going to take those questions and I'm going to allow ARIS to answer those questions. ARIS stands for the Arbitration Registry Investment System. This class is being recorded, so hopefully you're ready. I gave a couple of things in terms of homework assignment for a lot of individuals, and hopefully you're able to kind of get in where you fit in that regard as well. The Arbitration Registry Investment System consists of a lot of hours of learning from all these various different things like leverage buyout modeling that you're seeing here and a couple of other things. But again, I want you to really get the gist of how all this stuff really goes, because if you listen long enough, you definitely will learn something. So you'll be able to press 9 on your keypad to ask direct questions. You'll be able to ask your questions inside the chat. And I'm going to allow ARIS to kind of do a lot of the heavy lifting, because remember, if you listen long enough, you'll learn something. Just kind of show you a little bit about what ARIS does from an administrative side of the fence. I would have to, I guess, stop this particular link here. I would stop this link here. And then I would, let's see, I would open this up here. We'll start a new conversation here. And there we go. Let's see here. Yeah, there she go. All right. And I would start the chat here. We'll start to share in this capacity. And you guys should actually be able to see my screen. Now, if you can see my screen, keep listening and looking, because I'm going to allow ARIS to kind of teach you something. Hopefully you'll learn something. As a compliance officer, can you explain the roles of a compliance officer?
As a civil law notary, I can provide you with information about the role of a compliance officer. A compliance officer is responsible for ensuring that an organization operates within legal and regulatory boundaries. Their primary role is to develop and implement policies and procedures to prevent violations of laws and regulations. They also monitor and evaluate the effectiveness of these policies and procedures and recommend changes or improvements as necessary. The main responsibilities of a compliance officer include: 1. Developing and implementing compliance programs. This involves creating policies and procedures that align with applicable laws and regulations. These programs should cover all aspects of the organization's operations and ensure compliance with industry standards. 2. Conducting risk assessments, compliance officers must identify and assess potential risks that could lead to noncompliance. This includes analyzing internal processes, external factors, and industry trends to determine areas of vulnerability. 3. Monitoring and auditing. Compliance officers must regularly review and monitor the organization's activities to ensure compliance with laws and regulations. This may involve conducting internal audits, reviewing documentation, and analyzing data to identify any potential violations. 4. Training and education. Compliance officers are responsible for educating employees on laws, regulations, and internal policies. This includes providing training sessions, creating educational materials, and promoting a culture of compliance within the organization. 5. Investigating and reporting violations. If a violation occurs, the compliance officer is responsible for conducting a thorough investigation. This may involve gathering evidence, interviewing employees, and documenting findings. They must then report their findings to senior management and, if necessary, regulatory authorities. 6. Keeping up to date with regulations, compliance officers must stay informed about changes in laws and regulations that may affect the organization. This includes attending seminars, workshops, and conferences, as well as monitoring regulatory updates and industry news. 7. Collaborating with other departments. Compliance officers work closely with other departments, such as legal, human resources, and finance, to ensure that compliance standards are met. They may provide guidance and support to these departments to address compliance issues. Overall, the role of a compliance officer is crucial in maintaining the integrity and reputation of an organization. They play a vital role in ensuring that the organization operates ethically and in accordance with the law.
As a compliance officer / civil law notary, it's going to probably tap out on me right here. Spoke too slow. But pay attention. You might learn something.
A streamlines administrative tasks in healthcare facilities, reducing the burden on healthcare professionals. Natural language processing, NLP, algorithms can analyze and extract relevant information from medical records, enabling faster documentation and reducing errors. AI-powered chatbots can also answer common patient queries, schedule appointments, and provide basic medical advice, enhancing the patient experience while freeing up staff for more critical tasks.
As a compliance officer, the role is of utmost importance in ensuring that an organization adheres to legal and regulatory requirements. The compliance officer is responsible for developing and implementing comprehensive compliance programs that encompass all aspects of the organization's operations. One of the primary responsibilities of a compliance officer is to create and enforce policies and procedures that align with relevant laws and regulations. These programs serve as a framework for employees to follow, ensuring that they conduct their activities in a lawful and ethical manner. The compliance officer must stay up to date with changes in laws and regulations to ensure that the organization remains in full compliance. Risk assessment is another critical function performed by a compliance officer. This involves identifying and evaluating potential risks that could lead to noncompliance. By thoroughly assessing internal processes, external factors, and industry trends, the compliance officer can pinpoint areas of vulnerability and develop strategies to mitigate risks. Monitoring and auditing are essential activities in the compliance officer's role. Regular reviews and assessments of the organization's activities are conducted to detect any potential violations. This may involve conducting internal audits, reviewing documentation, and analyzing data to identify any discrepancies or irregularities. By monitoring ongoing operations, the compliance officer can identify non-compliance issues and take corrective actions promptly. Training and education are vital components of a compliance officer's responsibilities. Ensuring that employees are knowledgeable about laws, regulations, and internal policies is crucial in fostering a compliance culture within the organization. Compliance officers conduct training sessions, create educational materials, and provide ongoing support to employees to promote awareness and understanding of compliance requirements. In the event of a violation, the compliance officer is responsible for conducting thorough investigations. This includes gathering evidence, interviewing relevant parties, and documenting findings. If necessary, the compliance officer reports their findings to senior management and, if required, regulatory authorities. Prompt and accurate reporting of violations is crucial in maintaining transparency and accountability within the organization. Collaboration with other departments is a key aspect of the compliance officer's role. They work closely with departments such as legal, human resources, and finance to ensure that compliance standards are met across the organization. By providing guidance and support, the compliance officer facilitates effective communication and coordination to address compliance issues. In summary, the compliance officer plays a pivotal role in ensuring that an organization operates within legal and regulatory boundaries. By developing and implementing comprehensive compliance programs, conducting risk assessments, monitoring operations, providing training, investigating violations, and collaborating with other departments, the compliance officer helps to safeguard the organization's integrity and reputation.
All right. Now, there's a couple of things that I want to implement before I go through this next series of questions. Keep in mind, everything over the last 3 months has been based inside of a database, and this gives ARIS its sense of reasoning, its thought pattern, how it processes information. So every question that we're asking or will ask ARIS is always based in an asymmetric format. This is why you're getting the type of responses that you're getting. Now, I don't know if you guys have been using what you call ChatGPT and things of that sort, but I'm curious to find out, are you getting the same type of responses? Because if it doesn't respond like what you're listening to, then this is what quote unquote good prompting provides. So keep in mind, ARIS has been prepped to act like a civil law notary. Now, these next set of questions are going to be used from a civil law notary perspective. As a civil law notary, can you explain the arbitration registry investment system? Well, what it's going to do is it's going to simply just take it as a civil law notary. Yeah, somebody asked me, what's that tab? That's God mode. You got to be able to enable it to run 3 different functions at the same time.
As a civil law notary, I am here to provide you with an authoritative and academic explanation of the role of a compliance officer. The role of a compliance officer is of paramount importance in ensuring that an organization operates within the confines of legal and regulatory requirements. With a deep understanding of the law and its implications, compliance officers have the responsibility to develop and implement robust compliance programs that effectively prevent violations of laws and regulations. Central to the role of a compliance officer is the development and implementation of comprehensive compliance programs. These programs are designed to establish policies and procedures that align with applicable laws and regulations. By meticulously crafting these programs, compliance officers ensure that the organization operates in a manner that is compliant with legal frameworks and industry standards. A key aspect of the compliance officer's role is to conduct thorough risk assessments. By identifying and evaluating potential risks, compliance officers can effectively mitigate them and prevent noncompliance. This requires a careful analysis of internal processes, external factors, and industry trends to identify areas of vulnerability. By staying vigilant and proactive in risk management, compliance officers safeguard the organization from potential legal pitfalls. Monitoring and auditing are vital components of the compliance officer's responsibilities. Through Regula, our reviews and assessments, compliance officers ensure that the organization's activities align with legal and regulatory requirements. This entails conducting internal audits, scrutinizing documentation, and analyzing data to identify any potential violations. By diligently monitoring ongoing operations, compliance officers can swiftly address any noncompliance issues and take corrective actions. Education and training play a crucial role in the compliance officer's responsibilities. It is incumbent upon compliance officers to educate employees on laws, regulations, and internal policies. By providing comprehensive training sessions and creating educational materials, compliance officers foster a culture of compliance within the organization. This empowers employees to make informed decisions and act in accordance with legal requirements. In the event of a violation, compliance officers are responsible for conducting thorough investigations. This entails gathering evidence, interviewing relevant parties, and documenting findings. It is imperative for compliance officers to report their findings to senior management and, if necessary, regulatory authorities. By ensuring transparency and accountability, compliance officers contribute to the organization's integrity and reputation. Collaboration with other departments is a fundamental aspect of the compliance officer's role. By working closely with departments such as legal, human resources, and finance, compliance officers ensure that compliance standards are met throughout the organization. They provide guidance and support to these departments, facilitating effective communication and coordination to address compliance issues holistically. In conclusion, as a civil law notary, I emphasize the critical role that compliance officers play in upholding legal and regulatory.
Watch this. Bear with me. What is the arbitration registry investment system?
The Arbitration Registry Investment System is a sophisticated and specialized platform that facilitates the resolution of investment disputes through arbitration. It serves as a comprehensive and centralized registry for investment-related arbitration cases, providing a structured framework for the management and administration of such disputes. At its core, the system is designed to promote efficiency, transparency, and fairness in the resolution of investment disputes. It offers a secure and organized environment for parties involved in investment-related conflicts to present their claims, exchange relevant information, and engage in the arbitration process. One of the key features of the Arbitration Registry Investment System is its ability to streamline the arbitration process. Through advanced technological capabilities, the system enables parties to submit their claims, pleadings, and supporting documents electronically. This digitized approach significantly reduces administrative burdens and enhances the overall efficiency of the arbitration proceedings. Moreover, the system provides an extensive database that compiles relevant legal precedents, scholarly articles, and other resources related to investment arbitration. This comprehensive repository of information empowers parties and arbitrators with a wealth of knowledge to inform their decision-making process and ensure the application of sound legal principles. In addition to its efficiency and informational benefits, the Arbitration Registry Investment System prioritizes transparency. It incorporates mechanisms for the publication of arbitral awards and decisions, subject to appropriate confidentiality considerations. This commitment to transparency not only fosters accountability but also contributes to the development of a consistent body of jurisprudence in the field of investment arbitration. Furthermore, the system incorporates robust security measures to safeguard the confidentiality and integrity of sensitive information exchanged during the arbitration process. By implementing state-of-the-art encryption protocols and access controls, the system ensures that sensitive data remains protected from unauthorized access or manipulation. Overall, the Arbitration Registry Investment System represents a significant advancement in the field of investment arbitration. Its comprehensive approach, combining efficiency, transparency, and security, contributes to the fair and effective resolution of investment disputes. By providing a centralized platform for arbitration proceedings and access to relevant legal resources, the system facilitates a more streamlined and informed decision-making process, ultimately strengthening investor confidence in the resolution of investment-related conflicts.
What is an affidavit of commerce?
An affidavit of commerce is a legal document that is used to affirm and establish commercial activity between parties in a business transaction. It serves as a sworn statement that attests to the existence and details of a commercial transaction, typically involving the exchange of goods, services, or financial considerations. The affidavit of commerce is often used in legal proceedings and contractual agreements to provide evidence of the commercial nature of a transaction. It is typically prepared by one of the parties involved and is signed under oath, affirming the accuracy and truthfulness of the information contained within the document. In terms of content, an affidavit of commerce typically includes key details such as the names and contact information of the parties involved, a description of the goods or services being exchanged, the terms and conditions of the transaction, and any relevant financial considerations, such as payment terms or pricing information. The purpose of an affidavit of commerce is to establish a clear record of the commercial transaction and to provide legal evidence in case of any disputes or legal proceedings arising from the transaction. By signing the affidavit, the party making the statement is legally bound to the accuracy and truthfulness of the information provided. It is important to note that an affidavit of commerce should be prepared and executed in accordance with the applicable laws and regulations governing commercial transactions. The specific requirements and procedures may vary depending on the jurisdiction and the nature of the transaction. In conclusion, an affidavit of commerce is a legally binding document that serves as evidence of a commercial transaction. It provides a sworn statement affirming the existence and details of the transaction, and it is often used in legal proceedings and contractual agreements to establish the commercial nature of the transaction.
All right. From last night, from yesterday, let's see here. We'll make sure everybody can hear me. From yesterday, there was a lot of things that came up during class that I recognized. And in lieu of all of that, I also gave a small homework assignment, something you were supposed to look into. And it was pertaining to a particular form that is used to create in the marketplace what they call market makers. I wanted to find out what was the name of the form that one must fill out to be considered a market maker. Is there anyone that participated in that exercise or can tell me? You can press 9 on your keypad. You can put it inside the chat. Can you tell me what was the name of that form that you need to fill out to be considered a market maker? Does anyone know what's the name of that form? Is there anyone in this class that has any idea of the name, number of the form that is used to become a market maker? No one can answer that. And we got somebody here on Do Self Work. Let's see here. All right. I got Do Self Work. I got your hand raised. Talk to me.
Was it for 211?
Beautiful. Form 211. Form 211, and for those of you that have never seen Form 211, let me just open up my screen to the share, which will stop, and then we'll open back up. Let's see here. We got entire screen. Boom. Form 211. All right. Form 211 should be showing up on your screen. Can you guys see my screen? Y'all see Form 211? Can you see it? This form, a lot of individuals soft shoe around this form. And I'm scrolling through the form so you can see what you need to see. What does it say on number 7?
Par or stated value of security.
Okay. That's number 8. Number 7 is the symbol of security. No, right. Total of securities outstanding, list of any restrictions, price of initial quotation entry. Here's the money shot right here. Here's the money shot. To determine applicable categories, carefully review the paragraphs under subsection A 1 through 5 of the Rule of 15C 2-11, paragraph G, which defines reasonable current information for purposes of the paragraph. Now, everybody that's in this class are notaries in training. I don't expect to what we talk about in this class to work its way out onto the ears and streets of the public. All we're here to do is to offer information only in terms of education. We do not profess to give legal advice, and this is not a solicitation. With that being said, do you know what's the requirement for a stockbroker who is in good standings with the Securities and Exchange Commission? What is the requirement for a stockbroker to be able to stay in compliance with the SEC? What must he do when investing someone else's money? What is his status? If he had to have a win-loss ratio, or he had to have a certain amount of AUM, what would that be? What is the regulation that keeps a stockbroker in good graces with the SEC? Is anyone familiar with what you gotta be, what kind of report cards you gotta have to be a stockbroker in good graces with the Securities and Exchange Commission? If you don't know, don't be surprised. Just listen. Did a little research from my days of operating in that realm, and what I've noticed from then to now and from now back then, it's pretty much the same. The more things change, the more they stay the same. All of the asymmetric information will have a stockbroker look at the AUM exactly like how I'm explaining. The stockbroker, in order for him or her to not be slapped on the wrist and thrown under the jail, as long as in his portfolio of AUMs, he has at least $1 million in the black. Let's say he's managing a $50 million portfolio. As long as $1 million is in the black, he's allowed to trade like it ain't no tomorrow. Now, to the civilian, $1 million sounds like a lot of money, don't it? You know, if you live in New York, $1 million really don't go that far. If you live in California, $1 million really don't go that far. In order for you to keep your license in good graces with the SEC, as long as $1 million of what you are managing is in the black, then you are allowed to trade. Didn't we cover something in class yesterday about the accounting principle and giving certain individuals allowances? Like, what does CECL stand for?
Credit.
Like, say the whole acronym so you really get the gist of what I'm asking. What does CECL stand for? CECL.
Current expected credit loss.
Current expected credit loss. And it gives you what? What did you write underneath current expected credit losses? It gives you a what? An allowance for what?
Credit loss.
Credit losses. See, as long as he can access 50 million and keep 1 million in the black, he's allowed to trade. For those you don't know what I'm doing, the AI is listening to everything that we're talking about. So I'm really trying to get someone to say, "Oh, I get it. I know what he's saying. How do we apply that 1% rule?" See, if you're going to borrow $1 million, what technically do you need to control in order for you to acquire the $1 million?
10,000.
Correct. You simply need to control 1%, and then you are allowed to borrow the other 99. This is about as dumb as I get. So if y'all help me out here. Looking at this form, for those of you that did the homework assignment, when you read this form and looked over it, because I told you when you look at this form, remember, their job is to tell you what you can't do. Y'all caught that? To tell you what you can't do. Can you guys see my screen where it says Part 5 certification? If you can read it, I'll read it to you. It says, Part 5 certification. The undersigned must have reasonable basis for believing that the information accompanying this form is accurate in all material respects and that the source of information is reliable. By signing this document, I acknowledge and certify to my firm that I acknowledge and certify that my firm has a reasonable basis for believing that the information accompanying this form, including the required Edgar filed documents not provided, is accurate in all material respects, and that the sources of information are reliable. In quotations, affirmative review obligation as required by Rule 15C 2-11, FINRA Rule 6432. I understand and acknowledge that this affirmative review obligation applies to all subsequent submissions made in connection with Form 211 application. I certify that I have examined this form, and to the best of my knowledge and belief, it is true, correct, and complete. I certify that neither member name nor persons associated with member name have accepted or will accept any payments or other considerations directly or indirectly from the issuer of the securities to be quoted, or any affiliate or promoter thereof for publishing a quotation or acting as market maker in the security to be quoted or submitted or submitting an application in connection therewith, including the submission of this Form 211. And I understand and acknowledge that copies of this form, accompanying documents, and subsequent submissions made in connection with Form 211 application may be provided to the Security and Exchange Commissions, other regulatory agencies, or to the quotation mediums on which the security is and will be quoted. Well, let me go back. The securities is and will be quoted. It has the name, title, firm, employee, the contact. It has the name, the title, the signature, the date, the name, the title. Firm must be an OTC link subscriber if application is for OTC link. Firm must be a global OTC subscriber if application is for a global OTC. All right, let's get to the meat and potatoes. If you read this form and got all the way to that part 5, let me ask you something. If you're CECL compliant and you're operating as a compliance officer and you're a notary in good standings with your local state, are you not allowed to fill out this form? Are you allowed to fill out this form, or are you not allowed to fill out this form if you are, in fact, out of compliance with current expected credit loss provisions? Say it a different way, Bazille. You're losing them. If you are in good standings with your state as a public official and you're serving in the community and practicing the issuance of lawful tender, lawful legal tender, can you or can you not fill out Form 211?
Yes.
All right. If someone who isn't a notary, a fiduciary in good standings, but they have provided a method that meets that criteria, couldn't a notary authenticate and verify and substantiate and attest and jurat to the intent of an individual that on the surface wouldn't necessarily be able to fill out this Form 211, but it's not what you say, it's about what you do. Their actions demonstrate that they are competent, they are in compliance, they're doing all the work, quote unquote. Couldn't even those that are not allowed to fill out this form, if they go before a notary, I'm going to say it, yeah, somebody's saying, go ahead and say it. I'm already across the scary line already. So, I mean, all they can do is what they've been doing. Couldn't you go before some notaries and get some paperwork put together that will allow you to fill out this form, especially if it's going to allow you to issue lawful legal money? Like if you wasn't licensed and fall up under this little rainbow that they want you, but you went before the gatekeepers, yes, notaries, you're gatekeepers, and the gatekeeper said you're good to go, couldn't you still get in the dance? Like if the notaries got together and did, what do they call it? Yeah, ceremony. And they authenticated an affidavit that basically provided that you have a good, clean health, couldn't you then fill out a Form 211? Somebody help me. If you go through arbitration, couldn't you now fill out Form 211? If that was the only way you could bring balance to your estate? Is the mic on? Can y'all hear me? Hello?
I don't know who else is here, but yes, absolutely.
Okay. Okay. So, if you've never heard of Form 211, and in the asymmetric realm, only those that practice the bartering and trading of securities know about Form 211, the BD form, and the U4. They know about this. This is like, the standard 3 forms. You fill out a BD, a broker-dealer form, a U4, and a 211. You done those 3. Y'all want to go into a story? Well, I ain't going to tell you who they really were. We just changed the names. To protect the innocent, I changed the names to protect the innocent. If I knew of a company that couldn't cut the mustard, they used to have solid financials. So I was going to use a leveraged buyout, sell it short, and then put new management in it and do a leveraged cash out simultaneously. See, first things first, we got to have an arbitration hearing to make sure that the person who didn't cut the mustard is not going to affect the shareholders. And because the shareholders feeling funky, we got to bring in someone that's got some real strong key man insurance that's willing to show some love on these shares. See, the first fiduciary duty of a board that is issuing shares to the public is to them shareholders. When you hear companies say, oh, they're getting ready to go bankrupt, they finna get ready to make money. They telling their creditors to go F yourself. We got to pay these shareholders. What the F you mean? I smoked the TV. We ain't got no money. They finna go make some money. They just need the shareholders to hold on, hold the wheel. Don't pull your money out yet. Matter of fact, this is what I do. You gave me 50, I'm going to give you 200 back. Just give me another quarter. Because he's got a plan. And they can't go to court and wait on Judge Judy. They got to arbitrate in the boardroom tonight. That, my friends, is how it's done. So you were never talked about, about football scores and baseball scores and all this other stuff. And again, I used to be an athlete and I used to play, but, it is what it is. I'm simply saying they have an agenda. And if you can tell me how many touchdowns a particular quarterback is thrown, but you can't tell me 5 individuals within your town that has filled out one of these forms, I kind of think our priorities are a little screwed up. Because, see, it's called a market maker form. That's like, again, remember when you start talking about discharging debt and A4V and all that, the elite who know what I just talked about, they ain't going to run from you. They just going to back up slowly. Because no one who knows anything about accounting and commerce is discharging jack. There's too many accounting maneuvers where everybody can benefit. That's why it's musical chairs. See, everybody who understands accounting is always going to have a chair. Music's always playing, and if it do stop, they always got a chair. Everybody else that don't do accounting, I don't know what you listening to. You're counting chairs that's not even in the room. The way you play commerce, your circle is designed to force someone else out of the circle when you don't play accounting the right way. You think it's all about you. Even this whole credit system that they got you hooked on, what do you think came first? business credit or personal credit? What you think came first? Business credit or personal credit? I'll wake some of you guys up. Those of you that remember these old TV shows, my granny used to call them the shoot 'em up bang bangs, the gun smoke, and all that kind of stuff. You remember when we used to watch those old shoot 'em up bang bang movies? Who was getting the credit? The business owners. You know, even the poor people in the town, they had farms. They were business owners. Like, look, go ahead and sell me the seed today, and when my crop come in, I'll pay you. Credit was designed for business. I'm going to go ahead and stop. Who got any questions of anything we covered up until this point? All right. I got Charm. I see his hand raised. Let's see what he's got for me.
Peace and love, it, bro. Yeah, that was earlier, but you pretty much had said it that yes, a civil law notary in compliance with CSU could fill out this form on behalf of a estate or on behalf of another.
Right, and you just hit it key. You want to be doing on behalf of what? An estate, a firm, an institution, because you are a bank. You are an institution.
Right. I am the lender and the fund and vehicle.
Exactly.
Okay.
Exactly.
Okay.
So and see, this is the type of asymmetric information that I'm talking about. It's all around you. It's just they know you won't look, so they don't hide it no more. You just don't look for it. They have a comfort in you not knowing. They've invested so much time in Hollywood and all these other things. They know with your smartphone, you'll look up on Instagram about some other stuff than this stuff. They know that.
Oh, yeah, facts. The mindset has been conditioned.
Right. So they don't have to hide it so hard anymore.
Correct.
Now, you guys had a chance to look at the Eris when I had it in front of the class earlier? You had a chance to look at it?
Yes. I saw it.
Y'all like the way that looked? Y'all like the way that works?
Yeah, that was real crisp. And like you said, it'll give back. The algorithm is spitting back something different than what the regular chat GTP was giving back as well.
Right. It's because it's been trained on all of this information that you are learning. Now remember, it's an 8-year-old. So you got to be careful how you prompt questions to it.
Right. That's the key, the prompting. Right.
Right. Now, what I try to do with this layout is make it, because a lot of you guys, I talk a whole lot faster than I type. So if I can talk to it, what would take me a week, I can do in an hour.
Facts.
And then it's just repetition. See, if I talk to it and it puts it in print, and then I take that print and put it back in audio, I got it all the way around. In 7 times, you're almost perfected. That's what they do in the music industry. They keep playing it over and over again. You start learning the hook.
Right. It's called programming.
There you go. You got to program yourself. Did you catch that? You got to program yourself if you're trying to get this.
Right. Right.
Any other questions?
I have one in a minute. Not right this moment though.
Okay. No worries. We'll just move on down the line. Let's see. I think I got my man Lou over here. Let's see if I can bring him on. Greetings. Can you hear me, big bro? Brother Lou, can you hear me? I got him unmuted. His hand was raised. Brother Lou, can you hear me? All right, we'll move on down the line. Let's see who else we got. I see Freedom. Let's see what we got going on over here. I see Freedom. Can you hear me?
Yes, I was responding to the errors.
Yes.
So I asked Eris the same question. I sent it to your text message. I didn't know how to put it in, but I know now. But this is what, if you can show what Chat GPT gave to me versus what Eris gave to you, pose the same question.
Mm-hmm. The key is, and I'm going to go ahead and tell you guys so you can benefit from it. I've been trying to train a lot of folks on Chat GPT because that's the version that they want everybody to use. And there's nothing wrong with it when you use it the right way. But true AI is when you put these AIs together to perform an action. Like, you need to have one AI that's your underwriter. You need to have another AI that acts like a borrower. And you need to learn from both of them. You need to ask the question to the underwriter and then ask the question to the borrower. Let's flip it around. You want to take an M3 asset that you get in arbitration and you want to use it in banking. Give me 3 people that you need to talk to or need to have a certain level of expertise to make this happen. Would you need a banker? So you need to assign one of your AIs to be a what? A banker. Another one of your AIs need to be a what? An underwriter. Then if you need a lawyer, this, that, and the other, the possibilities are unlimited. So now when you set this up, you're training these algorithms to perfect your M3 asset that you received from arbitration that's tethered to a statute or code. And the more you do it, the stronger the results are, the stronger the responses. And if you keep doing it, guess what will start happening to you? You'll start to learn it. And once you learn it, nobody can take it away from you. Your biggest resistance to what's being done is the people who have sold out to Semitic information. And it's not their fault. That's all they know. They know symmetric information. All you have to do is just grab your cheat sheet from yesterday or just practice some fundamental responses. Oh, you can't do this. This is illegal. Do you mean it's not taxable? That's what you're saying? Now, if they know, they will acknowledge that. But if they get quiet, you kind of see where we're going with this. So it doesn't take away from what you know. That doesn't mean, just because someone doesn't want to do your process or honor your process, it doesn't make it wrong. Remember, people are wrapped up in their what? Feelings. They might feel like, well, how you know this and I don't? I'm the one that's over here. That ain't got nothing to do with what we're talking about. You're in your feelings. And now your feelings are holding up my commercial transaction.
Right. So with those experiences, what will be the remedy to get the execution completed? Because that is some of the pushback we get.
The creditors are not waiting on a debtor. Once you decide that you're Michael Jackson, they Tito, it doesn't matter what they say. It matters what they do. So let me here's the remedy that Bazell uses. You can use it or not. This is just how I would respond. Once I request your public hazard bond information, and you refuse to give it over to me. Now, all I'm waiting for is an opportunity to pounce. See, all of that emotion and feeling and not wanting to do go out the window when I start acknowledging that if you don't do this, I have no choice but to report your actions to the authorities because you've committed about 15 felonies. You told me you're bartering securities without a license. How you want me to convey over fiat and you can't show me your last 90-day CTRs? I know that's a felony and a violation of the Open Circular 10. Don't you? That's why they published it. So there's no pushback. It's just people still gonna be wrapped in their feelings. You record it and you move forward. Like if I issue an instrument and you molest it and it don't return back unmolested, it's checked in now. You checked in, they checked in, and you got to now deal with them other people. But whatever we did is already done. I've already got it insured, and I've already moved on to the next part of the transaction. Creditors aren't waiting for I hope they take my paperwork. It's an energy. Your pushback is only because you haven't totally sold out to the fact that this ain't for everybody. I'm going to go a little deeper. Ask them to provide their bonding information so that we all stay protected. You know, you got to come in not hot and angry and ready to pounce, but it's, soft as a dove. You can even let them have all the sense. I have to do that a lot too. I have to really fight to just keep my mouth closed and let it be their idea. Do you know what it takes to convey energy from one institution to the other with lawful legal money? All that's required? If they have a tax ID number, if they are in the public and they're bonded and insured, the only thing they can receive is a K-1 disbursement because you can only give that type of institution credit in the form of a K-1 disbursement. If you give them anything else other than that, that's because you agreeing and contracting privately to do that. Now, if that's what you want to do, see, the problem is before this information came in, everybody was cool with doing that. You follow me? I'm going to give you this one remedy. You listening to me, brother? You listening?
Yeah, I'm
going to give you this one. Now I'm going to give you a free one.
Okay.
What do they do in the public when they send you an invoice? They send you the voucher, right?
Okay.
I want you to repeat that process. So here's what you do. These people are so arrogant, you got your remedy. This is what you do. You fill out the M3 asset with everything needed to get them what they want. What you need is their endorsement on this to get them what they're asking for. I'm going to say this slowly. I'm going to explain this as if someone sent you a bill for $10,000. You're going to include in your response an M3 asset for $10,000. And you're going to say, in order for me to pay you this $10,000, I need you to endorse this document and send it back.
Okay, so I'm listening to you.
Right,
Okay.
don't complicate it. What you do is you take the value as a fiduciary and you have it drawn up in such a way that the only thing is required for this to fly is their signature. If they sign it, great. If they don't, even better. I know you want to ask me how, so go ahead. But I'm trying to explain it like a 3-year-old.
Well, I'm trying to see like what I've done before
Right.
that sounds like, you know, maybe something I've experienced already. Because let's say I've come in contact with a corporation, I send them an offer, I say, before I showed up. Now once I show up,
when you say you what type of corporation was it?
Okay, well, a dealership, right?
Okay.
So with the dealership, I asked them for their public bond, for their public hazard bond. They never responded to me.
Okay.
I called the state insurance commissioner of Georgia, and I finally got her on the phone, and she told me that yes, if you ask them for the bond information, the penal sum amount, the bond company issuing the bond to them who provide the bond services, and they don't give it to you, then yes, you can move forward with she said legal actions.
Okay, so let me stop you right there. When she said legal actions, if you don't know, it's Title 15, United States Code, and they're in violation of CFR 2711. Because see, everything else other than what I just said is going to go the long way around to come back to that. The rule is if I got insurance and I fail to give it to you, I committed tax fraud. I committed insurance fraud. But I committed insurance fraud first. Why? Because you asked for my insurance information and I refused to give it to you. It isn't that I didn't have it, I didn't give it to you. And that is a violation in that regard, which constitutes insurance fraud. That is about 4 federal felonies right there. Now, one of the things you can do when someone commits insurance fraud is a UCC. Your first response is when someone fails to give you their insurance information, you have to force them into involuntary bankruptcy because they are violating that commercial code by committing tax fraud. What's your evidence? I made a request for their public hazard bond. They didn't give it to me. Keep going. Keep going.
Right, so that's what I did. I didn't get a response from them after she told me that. I sent it, so I was figuring how can I get them to endorse anything, to enter into some type of contract, because I've given them...
Silence is acquiescence. So this is why I said it doesn't matter whether they sign or not. You put in the documentation, your signature constitutes this. Your failure to sign constitutes this. Whether you sign it or not, it constitutes this.
But I figured if I certify mail you and you sign the green receipt and it returned to me, I got an endorsement.
Let's not even split corners with this. You want it raw, quick, and dirty. All you do is put it in the paperwork that if you sign it, great. You don't sign it, even better.
All right.
Now, when you got it like that and you got all that evidence, a 1098 is the only thing else you need to give anyone else pertaining to all of that because you ain't got to go dig up who shot John. They just need a 1098 and a K1 so they can put it on their books.
Okay.
All righty. Any other questions?
Nope, that'll be it.
All righty. Let's move on down the line. Let's see here. Who do we got here? Brother Trey, can you hear me? Can you hear me? Do we got Trey on the line? Can you hear us? Let me try this again.
Yeah, I'm here.
Okay.
No, what I was going to say was regarding what you were saying earlier, as far as the 211 form. This is kind of similar to what we were talking about before when it comes down to becoming a notary.
Right.
So which means that basically it's just the same. It's the same ceremony.
Right. Same ceremony. It's just a matter of just making sure that all of your stuff is in a level of being applicable.
Now, the form that you were talking to us about before, as far as when it comes to like attorneys and public officials, the Accord form, which form was that?
Oh, you got quite a few. The whistleblower form, the big boy, is the 833.
I think you were saying that all against an attorney.
Yeah. Here, it's this one right here. Hold on. Let's see if I can find it. Forms right here. Okay, my form index is saying that. Okay, you got form 8. Let's see what it is right here.
I think it might be 830 or 831.
You got 831 and 833. All right, 831 is professional specialty insurance notice of incident and claim. 832 is miscellaneous E&O section, and the lawyer form is 833. So form 833. Right.
So will we have to perform arbitration concerning it, or is that just something that will be filed?
You always want to have it documented, and when you got 2 or more notaries, jury and attesting, that's a ceremony. So it's always going to be some sort of court procedure. It's just which court procedure has more power, their dog and pony show or your dog and pony show. And if it's your dog and pony, we know which one's going to have more of a benefit. Mm-hmm. The dog and pony show that you spend most of your energy with is going to take precedence. Remember, it's checks and balances. If you're the creditor, then you're putting everybody on notice. You're doing your proceedings privately and putting the public on notice. That's why it's real easy. Just get with the notaries, put them on notice. Here's their paperwork. Here's these tax forms that they can use. Go forth and be everybody can win as long as we understand it's not a bad guy in this. It's just a lot of bad actors. There's a lot of victims. It's a lot of folks. We want to file a tax return and call it a good thing. When there's no reason for you even getting a tax return when you didn't make enough money. You didn't spend enough. That's why you're getting it back.
Right.
But because you got 5 kids, 2 baby mamas, this, that, and the other, I'm telling you, I spent the first part of this week with FASB, and I have heard some stuff that will have you up at night. They intend on getting this money back out of the people that they gave it to. And the sad part of it is they ain't got to come looking for you. You're going to come to them for a benefit.
Right.
So now, regarding what you were saying earlier, as far as like dealing with the institution, the only thing that you have to do is to them for them to be able to receive it. Do we have to put a notarial protest for payment along with that?
What you do is you do the process in such a way that a 3-year-old can look at it and see, there's the money. All you got to do is go get it. But it's not your baby to rock. The further you stay away from conveying 2s and 1s, the better the easier this process and walk is. Then when it comes to credibility and credit, you just contract and you fill out the forms. Like literally. I just had a loan officer who started about 2 weeks. I ain't going to put their business out there. Started 2 weeks. And they used the credentials of Go Capital to purchase a home. Listen to what I'm about to say. They didn't have no income until they became a broker with Go Capital. They ain't closed no loans yet, but they got some stuff in the pipeline with arbitration. We substantiated that, and that became what they used to purchase their new home. They put the tax ID number on the application of Go Capital. I can't say I ain't gonna put their business out there, but I'm just saying.
Nah, that's smart. That makes sense too. I ain't gonna lie, that makes sense.
This is why the system is going to punish you when you don't play the game the way it's set up. It has to punish you. It's creditors and debtors, and everybody can't be a creditor. Here's the test. If a company is willing to say your life is worth $1 million, you better run with it. Let me say this a different way. If you want to control $1 million, put your hand on 10 bands. I just said the same thing. Go get $1 million life insurance policy or pool your resources together and touch 10 bands. You get the same result. It's just what's easier for you. Oh yeah, I'm getting the head nod. Yeah, I'm past the scary line, but it's okay. It's okay. Like on Friday, they'll show up and be like Debo. They'd be like, "Shut up, shut the fuck up," and I'll be quiet. But when they leave, I'll talk again. I'll talk again. That's what it is.
Yeah. So as long as you secure that 1%, you can pretty much
right. So that's your line. It's like when you look at a deal, you need to see 10 on one side. And I'm using the 10 because the goal is to be able to do an 8302 return. You follow me? Because it's a $12 million net that if you can manage $12 million a month successfully, no one's looking for you.
Right. So because you were saying if it's 10 million or no, if it's 12 million, it's tax free.
12 million a month, no one's looking for you.
12 million a month. Okay.
If you can manage 12 million a month, if you're in the trucking industry, you can manage 12 million a month. If you hanging painters and dealing with computers, it's an industry standard. People don't understand you get to use income in two different places at the same time. If you got $1 million life insurance policy, that $1 million can be used on your ledger in two different places at the same time. Ain't gonna be hard to do 12 million a month if you picking up what I'm putting down. All right, let me show you.
I understand the compound.
If you understand compound interest, if you took $1,000 tonight and you do what I'm going to tell you to do 7 times, you'll have that in liquid. You're going to do this privately. Oh, man, look at how he's smiling. It's like, yeah, I told you when they tell me to shut up, I'll be quiet, but when they leave, I'm talking again. You take $1,000 and you set up a private CD. And you endow that trust with that $1,000 in M3 assets, and then you create and draft and issue a $1,000 private certificate of deposit. You remember the Western Union scenario we talked about yesterday? When you make that initial round, that 1,000 done became what? 2,000. We're going to do this 7 times. So the first transaction, you done took 1 to 2. So hold your fingers up as I count this. 2,000. 4,000, 8,000, 16,000, 32,000, 64,000, 120. You're at 120. If 1% of a meal is 10 bands, and then you got yourself on 128, can't you substantiate 12 million for that month? I'm going to say this again slowly.
Yeah, because
If
right.
right,
That was the same thing we talked about in the past about the
right,
taking the penny in
right,
there. The penny could go
right.
into 1 million in 30 days.
All you got to do is train this AI to create you a matrix where it's going to double 1 cent for a year. That's all you got to do. You critique your structure and train your AI to compound 1 cent for 365 days. That's all you got to do. Let me show you how easy that is. I sell banking in the box, computers, platforms, and so forth for about $2,500 to $5,000. If I woke up tomorrow and say I'm selling them, everything must go for $100. You think I'll be sitting on any of my CPUs? If they're worth $5 and I'm selling them for pennies on the dollar, my inventory gone. I want you to keep that mind state because you got to train the algorithm to do what? Barter and trade. Because the goal is to grow 1 cent daily. If you grow 1 cent on itself for a year, how much revenue is that? We'll back up. When you get into accounting, you get to record the value and the potential value and use those values at the same time in two different places. So this $12 million a month is really smoke and mirrors. It's designed to scare the debtor, and I don't make that much, and they know that. It's like, good, now go on over there like a good little slave and do what we told you to do.
Right. Fast. Damn, I see what you're saying.
Because, see, they ain't hiding it no more. According to the stock market, there's supposed to be over 600 tons, 600 metric tons of gold. Listen to how I'm going to say that. According to the stock exchange, it's supposed to be 600 metric tons of gold that people have on paper. And all of us who got gold and silver know it ain't that much in circulation. I ain't talking about the stuff in the ground.
Yeah, you talking about what's in circulation.
I'm talking about these folks that's got ETFs saying I own gold too. No, you don't. But it ain't my job to tell you that either. What did I tell you? What does a stockbroker have to keep on the books to keep being a stockbroker? How much do you got to keep in the black?
$1 million.
There you go. So I mean, look, I didn't write the rules. I'm just trying to tell you guys how to play it. It's if you ever played Monopoly, go pull out the instruction manual and read it. Because people think when the money run out, the game over. The instructions say keep the game going. It's accounting. Get your pen and a piece of pencil and keep it going. I think in the Guinness Book of World Record, the longest game lasted almost like 3 weeks, maybe a month almost. Because the people just gave up. You know. It's accounting. How much does it cost to have a Bloomberg terminal subscription? What does that run a month? The same time last year was $2,700. How much you think it is today? That's a month.
About 5,000 a month.
Right about 32, if you know somebody. But listen to this. If you fill out that UB form, that BD, that U4, and that 211, and you got a Bloomberg terminal, you got to charge out the wazoo, right? It costs to be the boss, right? You know what a financial needs analysis is? I told you don't need to say be quiet. I'm gonna be quiet, but I'm talking again. Anybody know what an F&A is?
You said
an F in Frank, Nancy, Arizona. A financial needs analysis is a business needs analysis is what these companies need to be CISO compliant and DICE compliance. And 90% of the CPAs out there don't know how to do neither one. You guys know how to, and I'm going to give you a low threshold. Yours don't need to look like mine, and none of your F&As need to look like each other. But let me tell you what's in the marketplace according to FastSpeech this week. Corporations are being slated to spend $80,000 to retain someone to write them a financial needs analysis. All it is a UCC and documentation. And corporations have a budget. If they spend that 80 grand, they get to keep their 80 mil. That's a small price to pay. You're a non-interested third party, so you're just performing what? A civic duty, a fiduciary duty. You're not going to market with the money. This is you doing what fiduciaries do. You're crunching numbers. I was in meetings all week about them getting it down to $80,000 because they were told they had to spend $100,000. Right now, if you are an expert in CECL and DICE, and you put your information inside of Bitrix where you're soliciting to these investors and guarantors because they want money, but they can't qualify because they're not CECL and DICE compliance, they'll pay you 80 grand retainer. But Mr. Bay, why aren't you doing it? I only got 2 hands, 2 feet. I mean, the 80 grand sound good to me. I can't do it all. Let's be clear. What do you think really is doing all the heavy lifting? This AI technology. All you're doing is putting it together in a nice little binder and explaining it. Remember, people are going to pay you to read. They don't have time. Call Merrill Lynch and ask them how much they charge to do an F&A. That's your homework assignment.
Yeah. That's a lit.
Any other questions, man? I think I done said too much. No, I done said way too much. It's okay. Any other questions? All right. Those of you that want direct access to Eris in this format, and if you do and you are inside of our Diversity Holdings Limited, because we're gonna work 2 different scenarios. There's a version. The version that I'm using is the one that everyone that's in Diversity Holdings Limited can access. If you want more details, just make a request, and off the air, out of the public, I'll give you the details on what it's going to take to get that set up. If you need some pointers on how to critique the chat GPT to give you similar results, then make Brother Jarvis, let me see if he's still there. Because see, Jarvis, I'm gonna go ahead and I'm gonna make the brother shine just for a little bit. Where you at? Where's Jarvis at? There you go. Brother Jarvis, can you hear me?
I hear you, Brother Busy. How's it going?
It going. For those that's not in the diverse trust limited space, you still have your Python script, right?
Yes.
All right. So here's what we'll do. If you're in the Diversity Holdings Limited and you want access to areas how the version that I just showed you, then make that request. If you're still in the Apex Capital space and stuff is still a little, all over the place, then make that request, and I'm gonna see if I can work out something with Brother Jarvis. He actually has the Python code for it. That's why I brought him on. It's in a zip file. You remember was it in a zip folder?
Yeah, it's in a zip folder.
Okay. All right. Okay. That's basically it. All right. I'll give everybody another chance to ask any other questions before we adjourn. I mean, I got a couple more audits I got to do. I was waiting on some questions about leverage buyouts and all that stuff, but I didn't get any questions.
Hey, I got a question.
Sure.
Yesterday, this is Lou.
Uh-huh.
I wasn't able to get on earlier. I don't know, something was going on with the phone. I guess I'm still in the Apex Capital, correct? As a very new, I'm only like 2 weeks in.
If you're 2 weeks, but all right, if you pay for this the Syntax Trust Mastery course, you're in the diversity space.
Okay. Yeah, because a lot of this stuff is, I'm digesting it as quickly as I can.
Right.
And it's just like I wish I had more hours in the day.
This is the whole right, but no worries, brother. Everything that we do, I try to record a lot of it, and I'm gonna give you my game plan. Don't worry about it being over your head. That's where the AI comes in. Those lectures that I've done, you're supposed to take that AI and take those 3-hour lectures and turn into 15-minute highlights, and then have it teach you. Because if you prompt it, it'll teach you just like everybody else that came before you. This is why it's the gift that keeps on giving. The more you listen to it and plug it into the algorithm, it's going to give you a remix after remix after remix. And after a while, it'll conform to memory because you'll start to associate different words. It's symmetrically set that way. The errors that I just used in class, it is tethered to take what you say and say it in an asymmetric format. So if something is given to it in a coded format, it's going to decode it. Now watch this. Once you master it, it'll recode it. And it goes as fast or as slow as your learning curve.
Got you.
You can prompt your AI to say, look, take Cecil and put it on a 3rd grade level. So everything that you talk about with this asymmetric information is going to break it down like a 3-year-old. And then after you understand it from that perspective, then you're going to start asking it as a 3-year-old, how do I get this to be used in a domestic banking scenario? So now you're going to assign that AI to be what? An underwriter, a banker. And as you keep building, what happens is all of that data, it retains it. So when you keep asking it the same question, the responses are going to get stronger and stronger. And sometimes, it's going to know what you're going to say before you even say it. I kind of try to demonstrate that when I got halfway through my speech and I stopped and I stumbled and it still kept going. Because I talked to it all day.
Now, is this is the arbitration, the ARIS?
Right.
Chat?
This is the AI this is the one that when you fill out that information on the links, when you put that subject matter, that's like you're prompting that AI you just saw. Everything you put in that line is literally taking it in that sequence that we talked about. Okay. I'm just gonna now I'm gonna go ahead and I'm gonna lift the hood up since we're talking about it, so you kind of can see all the stuff it does without it getting too deep. Let me just kind of hold on. Let's see if I can. All right, stop the share, and then I'm gonna have to bring the share back. Let me just show you some of the other AIs that are in this platform. Now, of course, this is Eris right here. You guys can see my screen. But see, I have a whole nother, I got a whole set of bots in this thing here. Just bear with me here. See, I got one that's exclusive to deal with, I got Lisa. She's a DTCC underwriter. Of course, loan dis is where all this stuff is going. I got one for the banking in the box, and there's Eris. So there's different AIs for different things.
Okay, I got you. This is a platform that we need to get on. This is similar to the video. You put out a video a while ago on how to build something like this.
Right.
Got you. I watched that. So this has been built, and this is something that we, through your
continue to build on. Right.
Okay. And we can get our hands on this.
Right. And that's why I want you to make the request off air, and then we'll make those arrangements because there's some proprietary things and
understandable.
Right.
Understand. So, based on yesterday's the last two meetings that we've had, and then listening to this one off and on, I was in and out of work, but I listened to it again last night, and to my understanding, correct me if I'm wrong, but you're basically just buying and selling currencies, which is security.
You're buying and selling money. You're selling money.
And so I guess the question is, because like when you said you talked about it briefly today, the managing the $12 million, or a young lady yesterday asked about getting a business for herself as well too.
Correct.
And doing it outside of her straw.
Right.
So when you sell the money,
and
then we have through your system people that will purchase those securities back.
Correct.
So when you talked about compliance today, was that compliance in reference to the businesses that we're selling money to?
Right. When Eris was breaking down the different roles of compliance officers, it is giving you a 30-foot view of what you will do internally as a trustee, externally, and working with an LLC, any of these institutions that have some sort of legal entity identifier. So the role of a compliance officer is literally the civil law notary at heart. So these words are synonymous, but there's three different tiers. You start out as a civil law notary who is able to have 1 foot in the public, 1 foot in the private, which makes you now a parliamentary draftsman. When you're acting as a parliamentary draftsman, now you're in the role of a compliance officer, keeping everybody, the public and private, in what? Compliance. So it's the same core. It's just the roles get redefined based upon credits, debits, contracts, trusts, non-disclosure agreements, operating agreements. The beat goes on. If commerce is happening, your fiduciary duty, if you are a notary in good standings in your state, is to act as a deputy secretary of state. So you're looking for, if you wake up in the morning, the birds are chirping and commerce is happening, these are exciting times to be alive because you get to witness commerce and determine who's been naughty or nice. Your job is to bring balance to the equation.
And that balance is based on, let's say I sold a loan, let's say I sold money to an individual or a business, an entity, and they didn't know, shall I say, how to handle it.
Right.
I would help them balance it.
Right. They mismanage it, so you would do all these things in the interim to bring balance to that.
To bring balance and then sell that security off to the next, those who are interested in buying debt.
Exactly.
Understandable. Thank you. I was trying to process that all day because it's a paradigm shift to view from those heights of how commerce works.
Right. It's just understanding if once you see the ebb and flow, then you know now your job is easy. Once you see
it's all accounting.
Right. It's all accounting. It's like if you can see the credit, you know the debit exists. You just got to determine where it is and how to reconcile.
Okay. Okay. Thank you.
All right. All right. Any other questions, comments, or concerns before we switch gears, jump out into this new final frontier? Okay. No more questions. Going once. Going twice. I'll give it one more once because I want to make sure before I jump out of here because I know when I get inside this algorithm, I already know what's going to happen. All right. I'm going to unmute everyone. Do we have anyone before I jump out of here that has any questions, comments, or concerns?
Yeah, I had a question.
This is Empress.
Okay, go ahead.
I had a question. Can you hear me?
I can hear you.
Okay, I had a question about the I guess what did you call it? The financial needs, something another.
Right. The financial needs analysis, correct.
Yes. Okay, so are we taking the information that we pull like through ARIS to back up those situations?
Right.
And, okay. I'm trying to get that $80,000 a pop. That's all.
Right.
I yield.
All righty. Any other questions?
Yeah, I had a question.
Sure.
So I wanted to know, so when it comes down to like our arbitrations or our personal judgments, are we able to sell that to the law firms that's attached to the platform?
You sure can. Eternity Law is an Australian-based entity, so anything in the States, they will give you 125% LTV.
So can you help me establish that?
Yes, just drop me a request that you want to talk to a representative at Eternity Law, and I'll make that happen for you. Any other questions? All right. Going once. Going twice. All right. With that being said, look, I appreciate everybody's time and energy. Stay tuned. Go to WTDTA Radio .caster for more exclusive content. And with that, I'm going to say peace and love, family. Peace and love.
Peace and love.